Welcome to the deep dive. We take those stacks of reports, news articles, analyst opinions, and we boil them down to the stuff that really matters.
That's right.
Today we're looking at an ETF that's fresh out of the gate, launched just this month, and it's already making waves. We're talking about the Fundstrat Granny Shots U.S. Large Cap ETF, ticker symbol GRNY.
Interesting one, this one.
It is.
What's fascinating here is the strategy.
Yeah.
It's called the Granny Shot approach, and it's all about leveraging the wisdom of the crowd, specifically the crowd of Wall Street giants. Think institutional investors, the big players.
Oh, wow. So instead of trying to outsmart the market,
Right.
they're trying to tap into the collective intelligence of these institutions. That's a pretty unique approach, but does it actually work? That's what we're here to find out.
That's the million-dollar question.
It is. Okay, first things first, let's break down the basics. The GRNY ETF aims for long-term growth by investing in large U.S. companies. Pretty standard stuff for a large-cap ETF, right?
Right. But here's where it gets interesting. This ETF is actively managed by Fundstrat Capital, an independent research firm known for, well, let's just say they're not afraid to shake things up a bit. They've got a reputation for blending data analysis with market psychology.
Okay, so they're not just crunching numbers. They're trying to understand the psychology of the market. That's a whole other level of analysis.
They use this thing called top-down fundamental analysis to look at the big picture.
Right.
But then they also drill down into specific companies using what they call a quantitative bottom-up strategy.
So they're doing both.
Yeah, they're looking at the whole chessboard,
Interesting.
but they're also planning each individual move.
Gotcha.
And to make it into this ETF, a stock has to align with at least two of their identified themes.
That's a pretty high bar.
It is.
Well, tell me about these themes.
Sure, so they've got both short-term and long-term themes.
Okay.
And these themes are really what they believe are going to drive market performance.
Okay, so let's start with short-term.
Okay.
What are their short-term themes?
So on the short-term side, they've got style tilt, they've got seasonality, and they've got PMI recovery.
Okay, so break those down for me.
So style tilt, that's all about adjusting the portfolio to capitalize on shifts in market trends.
Okay.
It's almost like they're trying to surf the waves of market sentiment.
Interesting.
Seasonality that leverages these historical patterns of stock performance, so, those trends that tend to repeat during specific periods.
Gotcha.
And then PMI recovery that focuses on companies poised to benefit from an improving economic outlook.
And when you say PMI...
PMI stands for Purchasing Managers Index.
Okay.
And it's a key indicator of economic health.
So they're really trying to anticipate those short-term market swings and position themselves for success.
Exactly.
But I gotta say, I'm really more intrigued by the long-term themes.
Oh, yeah.
What are they looking at there?
So for long term, they're looking at things like millennials,
Okay.
global labor supplies, and the rise of AI automation,
Wow.
energy security,
Okay.
and easing financial conditions.
So those are some pretty big forces shaping the world right now.
They are.
And they believe that these themes are going to have a major impact on how companies perform.
Absolutely.
So how do they translate these big ideas into actual investments?
Sure. So let's take the millennials theme, for example.
Okay.
They've invested in Amazon,
Makes sense.
recognizing the massive influence this generation has on online shopping trends.
Yeah, I mean, millennials are digital natives. So, of course, a company like Amazon is well positioned to capitalize on their spending habits.
Right.
What about the global labor supplies
Yeah.
and the rise of AI automation?
So for that one, they've invested in American Express.
Really?
Yeah, and you might be thinking, how does a credit card company fit into that? But, American Express is deeply involved in data analytics and financial technology.
Right.
They're likely leveraging AI and automation to streamline operations, improve customer service, and manage risk.
So they're not just a credit card company anymore. They're a tech company, too.
Exactly.
Interesting. Okay, how about energy security?
For that one, they've included Eldorado Gold,
Okay.
a gold mining company.
Right.
Gold is often seen as a safe haven asset during times of global uncertainty.
Especially now.
Yeah, and considering the current geopolitical landscape and the ongoing energy transition, it's a strategic choice.
So it's like they're hedging their bets against potential disruptions in the energy market.
Exactly.
And their final theme, easing financial conditions. What do they pick for that?
So for that one, they've invested in Caterpillar.
Caterpillar, the construction equipment company.
Yeah, they're a global leader in construction and mining equipment.
Right.
And as financial conditions ease and the economy picks up, demands for those sorts of products usually increases.
Oh, so they're anticipating a potential boom in infrastructure and construction projects as the economy recovers.
Right.
Okay, I'm really starting to see how these themes connect to their actual
Yeah.
investments.
Yeah, it's all about understanding the bigger picture and then finding those companies that are best positioned to benefit from these emerging trends. So it's a pretty cool approach, right?
Yeah, I mean, it's definitely different.
Yeah, it's definitely unconventional.
I'm already intrigued. Now, let's get into the portfolio. What kind of companies are they holding?
As of November 18th, 2024, their top 10 holdings include some big names you'd expect, Tesla, Netflix, Apple, but then they've also got some less obvious choices like Axon Enterprise and CrowdStrike.
Okay.
It's a mix of established giants and up-and-coming disruptors.
So they're not just following the herd, they're making some bold bets. I like it. And what about sector allocation? Where are they putting their money?
They're leaning heavily towards technology at 31%, followed by industrials at 26%, and financials at 17%. This tells us they're betting on growth and innovation, which is pretty standard for a large cap ETF.
Sure.
But the specific companies they've chosen within those sectors is what makes this ETF unique.
So it's not just about riding the wave of a particular sector, it's about picking the winners within that sector.
Yeah.
That's where Fundstrat's expertise and their granny shot strategy really come into play. But the big question is, how has GRNY actually performed?
That's the catch. It's brand new. It launched just this month on November 7th, 2024, so there's not much historical data to go on.
Talk about a fresh start. So we can't really compare it to established benchmarks like the S&P 500 or Russell 1000 just yet, but we do know the net asset value is already over $20 a share. That's got to be a good sign, right?
It definitely suggests strong investor interest right out of the gate, but it's way too early to draw any conclusions about long-term performance.
All right, fair enough. We'll have to
Yeah.
keep an eye on that. Now let's talk about something that's always on investors' minds, fees.
Yeah.
How does GRNY compare in terms of cost?
This is where things get really interesting. Their expense ratio is 0.75%, which is significantly higher than a lot of passive ETFs that just track an index.
For example, the super popular Vanguard S&P 500 ETF VOO charges a tiny 0.03%. That's a huge difference. So are they worth that extra cost? That's what we're going to explore in the next part of our deep dive. Stick around because this is where it gets juicy. And remember, this is for informational purposes only. We are not providing financial advice. Don't forget to subscribe to our channel and hit that notification bell so you don't miss more.
We're digging even deeper into the Fundstrat Granny Shots US Large Cap ETF.
Right.
We left off talking about fees, and you might be thinking, a 0.75% expense ratio, it's pretty steep compared to those dirt cheap index funds. And you'd be right to question that.
Yeah.
That higher fee means GRNY's management needs to generate returns that outpace the market, and not just by a little bit, to justify the extra cost. It's a high bar to clear, but that's the gamble you take with active management. You're paying for their expertise, their research, their ability to hopefully pick those winning stocks.
So it's like we're paying for their skill set to try to get us better returns than just buying the market.
Exactly. So let's see if their stock picks in this granny shot strategy are really all they're cracked up to be. As of November 18th, 2024, they had 38 stocks in their portfolio. That's actually a pretty concentrated number for a large cap ETF.
Really?
Most large cap ETFs hold hundreds of stocks.
Oh, that's interesting. Why do you think they're going with a more concentrated portfolio? What's the thinking there?
It all ties back to their active management approach.
Okay.
They're not trying to mirror the entire market. They're making deliberate choices about which companies they believe in. Each holding has to earn its place in the portfolio. And remember, they're looking for that granny shot consistency, those companies they believe are going to deliver reliable long-term growth.
Makes sense. And when we look at their sector allocation, we see that focus on specific areas they think are poised for growth. They've got a significant tilt towards technology, industrials, and financials.
Right. Those sectors are generally considered to have strong growth potential. They're driven by innovation disruption and those long-term trends that are shaping the global economy. But it's not just about picking the right sectors. It's about picking the right companies within those sectors.
Okay, let's break it down. Technology, that's a no-brainer, right? We're seeing rapid advancements in AI, cloud computing, the Internet of Things. It's all happening so fast.
Exactly. But GRNY isn't just betting on any tech company.
Right.
They're looking for those companies that are using technology to transform entire industries to create those brand new markets. They want to be on the ground floor of the next big thing.
So it's not about chasing the latest gadgets. It's about understanding the underlying trends and finding those companies that are leading the charge. Got it. Now, what about industrials? That seems a bit more old school.
It might seem that way, but think about it. Industrials encompasses a huge range of companies, manufacturers, transportation providers, construction firms, and they're all being impacted by these massive global trends like infrastructure spending automation and the rise of emerging markets.
So it's not your grandpa's manufacturing industry anymore.
Right.
They're looking for those companies that are adapting, innovating, and finding ways to thrive in this new landscape.
Exactly. And that's where their active management approach and that granny shop philosophy really come into play. They're not just blindly following the herd. They're doing their own research, digging deep and trying to identify those companies that are poised for growth, even if they're not the obvious choices.
All right, I'm starting to see how they're putting this granny shot strategy into action.
Yeah.
Now, let's talk about financials. That's another massive sector. What's their angle there?
Financials is all about banks, insurance companies, asset managers, the companies that provide those essential financial services. And this sector is very closely tied to the overall health of the economy.
So if the economy is doing well, financials should be doing well too, right?
Generally, yes. And with GRNY, they're looking for those companies that are well positioned to benefit from things like rising interest rates, economic growth, and that increasing demand for financial products and services. They want those companies that are both stable and have growth potential.
That makes sense, but how are they choosing those specific companies? It's a vast sector with so many options.
They're doing their homework. They're carefully analyzing each company's financials, their management team, their competitive landscape, really digging into the details to see if they have what it takes to deliver those consistent granny shot style returns.
Okay, so we've got a good understanding of their sector focus. Now let's get into the nitty-gritty, their actual holdings. As of November 18th, 2024, their top 10 holdings included a mix of household names and some lesser-known companies. Let's start with the big ones. Tesla, Netflix, Apple, those are some heavy hitters.
They are. These companies need no introduction. They're global giants with strong brands, loyal customers, and innovative products and services. But remember, even these giants face their own challenges. No company is immune to disruption or market forces.
Right. Every company has its risks. But GRNY clearly believes these companies have the potential to overcome those challenges and continue to grow. Now, let's talk about some of the less obvious holdings. Axon Enterprise and CrowdStrike. What can you tell us about them?
Axon Enterprise is a leading provider of law enforcement technology. Think body cameras, tasers, those tools that are becoming increasingly important in law enforcement.
That's an interesting niche.
It is, and it's a growing one as law enforcement agencies around the world adopt these technologies. Axon is well positioned to benefit.
Okay, so they're tapping into a growing market with a clear need. What about CrowdStrike?
CrowdStrike is a cybersecurity company specializing in cloud-based endpoint protection. With cyber attacks becoming more sophisticated and frequent, companies are turning to cloud-based solutions to protect themselves.
Cybersecurity is definitely a hot sector these days.
It is, and for good reason. GRNY is investing in companies that are addressing those critical needs in today's world. They're looking for companies that are solving problems, innovating, and creating value.
So they're not just chasing flashy trends. They're thinking about the bigger picture and the long-term trends that are shaping the world.
Yeah.
I like it. We've covered a lot of ground here. There's sector focus, their top holdings, and how their granny shot strategy informs those choices. But how is all of this translating into actual performance? That's the million-dollar question.
Right. But as we said before, it's still early days.
Yeah.
GRNY just launched this month, so there's not much historical data to go on.
We can't really compare it to those established benchmarks yet, but we do know they've attracted a significant amount of investor interest right out of the gate. Their net asset value is over $20 a share, which is impressive for a brand new ETF, so they're off to a strong start.
They are, but it's important to remember that past performance is not indicative of future results. The market is unpredictable, and there are always risks involved.
Yeah.
We'll have to keep an eye on GRNY and see how their granny shot strategy plays out in the long run.
All right, fair enough.
Remember, this is not financial advice, just our deep dive into the information.
Exactly. Let's talk risk. Every investment has some level of it, right?
Absolutely, and GRNY is no exception. Just like any stock market investment, there's always the potential for loss. The value of your investment can fluctuate based on so many things: market conditions, economic hiccups, company-specific news. All those factors can impact the ETF's underlying holdings.
Right, so even with this granny shot strategy aiming for consistency, there's still that inherent market risk.
Exactly, and on top of that, GRNY is actively managed, which adds another layer. The fund's performance is heavily reliant on the decisions made by Fundstrat's management team. Their stock picks, their sector allocation, their overall strategy. It all determines whether this ETF hits the mark or falls short.
So how should investors think about GRNY within a diversified portfolio?
It could potentially serve as a core holding for investors specifically seeking exposure to U.S. large cap equities, especially those leaning towards a growth strategy. But you have to factor in that concentrated portfolio and their specific sector tilts.
Right. You wouldn't want your entire portfolio riding on those same bets.
Yeah.
Diversification is key, spreading your investments across different asset classes, sectors, and geographies.
Couldn't agree more. Now let's see what those analysts are saying about GRNY. Remember, these are just opinions, not gospel, but
Yeah.
it's always good to get different perspectives. Seeking Alpha, they're intrigued by GRNY's rapid asset growth and that almost equally weighted portfolio. They think it could be a compelling choice for investors who want that actively managed large cap growth fund.
So they're seeing potential in that granny shot strategy, even with the higher fees.
Right, but then you have Morningstar, and they're taking a more cautious approach. They haven't given it a rating or a full assessment yet. They're waiting to see how the fund performs over time. They want more data before they make a call.
So we've got a mix of opinions, some optimistic, some holding back. Sounds like a classic wait-and-see situation for a brand new ETF.
Exactly. And that's why it's crucial to gather as much information as possible before making any decisions. Read those analyst reports, compare GRNY to similar ETFs, do your own deep dive into their holdings and strategy.
All right, let's bring this deep dive to a close. What's the final verdict on the Fundstrat Granny Shots U.S. Large Cap ETF?
It's a unique offering. That's for sure. There's potential for reward, but also potential for risk, like any investment. The granny shot approach is intriguing, but only time will tell if it truly delivers those consistent market-beating returns.
Right.
Weigh those pros and cons, consider your own investment goals, your risk tolerance, and then make the choice that's right for you.
That's our deep dive on the Fundstrat Granny Shots ETF. We hope you found this exploration insightful. What are your thoughts on the granny shot approach? Let us know in the comments. And don't forget to subscribe to our channel and hit that notification